Modify your coverage level. Liability only insurance is typically cheaper than full coverage according to insurify data trends. While you may meet your state's minimum liability requirements, liability insurance only covers damage that you cause the another person's car, property and injuries. It doesn't cover any damage to your vehicle. Full coverage car insurance provides coverage for repairing on or replacing your vehicle after a converted incident. Consider modify your coverage to liability if you drive on older vehicle that you paid off and its car fair market value is worth less than what it would be for a major repair. If you drop full coverage from your car insurance policy, you can save roughly 40 to 90% on your premiums. For example, a full coverage policy with Dairyland is an average of $229 a month, but its average liability only premiums are much lower at $83 a month. The table below shows the difference between insurer's liability and full coverage average premiums. But remember, it's a good idea to err on the side of more versus less when it comes to coverage. Look into monthly payment plans. Many car insurance companies offer monthly payment plans which can make your premiums payments more manageable if you are on a budget. Rather than paying your annual premiums upfront and in full, you usually have the options to pay it in 6 or 12 installments depending on the length of your policy terms. However, you can often get a discount for paying your annual premiums in a lump sum when you first purchase coverage. You should consider paying annually if you want to save money. The following insurance companies let drivers break up their premiums into monthly payments. Consider pay as you go or paper mile insurance. Both pay as you go and paper mile insurance aim to help reduce your cost by for allowing you to pay only for the amount of insurance you really need. Several paper mile companies like Mile Auto and Motor Mile charge based on the number of miles you drive in a month. If you don't drive much, this can be a good way to lower your car insurance cost. Hago is a pay as you go car insurance company that currently offers coverage in Alabama, Arizona, California, Florida, Georgia, Illinois, Indiana, Mississippi, Ohio, Pennsylvania, South Carolina, Tennessee, and Texas. Drivers who need temporary car insurance can purchase coverage for as little as 3 days or in intervals of 7 days, 14 days, or month or 6 months. Compare multiple car insurance quotes. The most effective way to find cheap, no down payments car insurance is to compare quotes. To make the process easier, try using a car insurance quote comparison site to get quotes from multiple insurers with a single applications. Another option is to get quotes on individual insurance company websites and compare the quotes manually, but comparing quotes this way takes longer and some car insurance companies require you to call an agent to get a rate estimate. Car insurance with no deposit facts. If you are on a budget, it's possible to find affordable car insurance. Here's some additional information that might help as you research different policies. Do all car insurance companies require a deposit or down payments? If you are on a budget, it's possible to find affordable car insurance. Here's some additional information that might help as you research different policies. Do all car insurance companies require a deposit or down payments? All car insurance companies require some form of payments upfront before you can purchase coverage. This is a way for insurers to reduce risks whether you make a traditional deposit or pay the first month premium. You must pay something to look in your policy. You won't find any car insurance companies that provides coverage for free with $0 down. Even Hago requires customers to fund an account with money that the company draws from when it turns on coverage. Is it possible to get every cheaper insurance without a down payment? Although you can get coverage without an additional deposit, you are always required to pay at least the first month premium upfront before your coverage takes effect. Depending on your insurance company, you usually also have the option to pay the premium annually, be biannually, annually or quarterly. Whatever amount you pay upfront is considered the deposit, with the lowest deposit being the first month's premiums.